Hello traders, this is Trader Cisco from UsdJpy. I thought I'd give a little bit of an insight into the dollar yen and what occurred today that really set up to be quite a beautiful play as far as trading regarding Fibonacci levels. First, let's look at the daily chart just because I want to show you this trend wall where we had our bearish move down. That is a pretty important play as it'll come into our conversation here in a minute. But we see that we obviously had a trend wall that was very evident there on the top side. And if we look at the 4 hour, we will notice that we also had a channel that was building here that was definitely in an uptrend. We had one break out of that channel, but really it ended up being a false break as it came right back into the channel and then continued to respond off of it. Now if we go to the 1 hour chart, specifically what I want to show you is that I drew a Fibonacci based off of that false break that we just talked about, which had a low of 86.33. That was from July 22nd to the high that we had going to July 26th of 87.70. So we had this Fibonacci range drawn here, and then what's critical to note is how the market responded in this 618 area of this pullback, or as it moved up, then it started coming back and it got to the 61% mark of that initial uptrend. And notice what happened. Now the way that I personally like to trade these type of setups is I use a 20 pip stop for this type setup, and if you'll notice, if your entry would have been at 86.85 as was mentioned, the low at this point was 86.81, so it went 4 pips against you at this point. Again, we're looking at the 1 hour chart just to keep focus here. So it went 4 pips against you was the low that we had here, and then it continued to climb all the way up to a high of 87.38. So with that high, you're roughly talking about a 50 pip trade, and it only went 4 pips against you. Even with a 20 pip stop, that would have been a 2.5 to 1 ratio return, which is an exceptional trade. Now the Fibonacci levels were still in play as it continued to confirm off of these levels. Look how strong it hit these levels and held right in through here. Obviously, anytime you have a combination of a trend wall and a strong Fibonacci level, it's even further assurance that you can continue to trade that. If you would have taken your 2 to 1 or 2.5 to 1 ratio, then when it came back down here and hit again, you could have again had an entry in this area right here at the 86.85 level again, and the lowest point that was seen with these 3 hours was a low of 86.82. Again, 3 to 4 pips, and we started this move up. Now this move wasn't as strong, did not provide as much. However, even when we had this pullback here to a low of 86.82, we still have not come anywhere close to our 20 pip stop loss that we would have had. And then what you notice is a beautiful move up that it has continued to accelerate. Now there's one other thing to note too from this move is not only did this move from 86.85 pay out 100 pips or a 5 to 1 ratio as we're now currently setting at 87.85, but there's also something else to take note in with this move, and that is the fact that once we had this next testing of the 618 level, and you would have entered again either here at this point and had patience to stay in, or at this point, there's also one other play that comes in, and that's that play that happened right here at the 50 back level. You'll notice that that level was respected as this hourly candle went up and tapped it and pulled back. Then it hit it again, and now what I'm watching for at this point is for that time where it's going to now respect this move and go ahead and pull through this level. Now what I want to do is I'm going to zoom in just a little bit on this because I want you to see it a little bit closer as we see what happens. So here we have this level got tested, pulled back, it hit it again. Now the big key is that again this level is 87.01. This 1 hour candle here opened at 8700 or in that same area. Now once it broke above the wick of this candle, which was 8704, many individuals will look at that as another opportunity to enter a second position on this trade, and obviously that would have been a very nice play too. Now, some people like to use the 382. I find that it's also a level worth looking at You'll notice what happens when this level came to, it passed through, then this candle came back and basically addressed the 382 level yet again, and then it took off. So basically, just by using these three Fibonacci levels, there were 3 clear entries that could have been found for this uptrend move, not to mention the move that we had already previously had as this level was respected. So keep that in mind. These may give you a little bit of insight of how Fibonacci levels and trend wall moves can be used and respected. Now there's one other piece of information that I want to share with you on this, and that was the fact that, remember, we spoke earlier about this trend wall here and what has occurred with this trend wall. Well, now if we go back and look to the 1 hour chart, you'll notice that we've actually had a 1 hour open above that daily trend wall, and we've also now had an open above this channel trend wall. Those two things combined are signs that will continue to be a bullish move with the USDJPY, in my opinion. It looks like currently we may even be getting a retest of one of these two trend walls before it bounces again. So I hope this information helps you. I'm glad to share it with you. Again, you can follow me at UdoTrading. That's EUODOO trading.com, and I can be followed also on Twitter as Trader Cisco. Have a great day.